You know, in the world of crypto trading, it's always felt like you have to make a choice, a big compromise. But what if that's not true anymore? Today, we're going to look at a platform that claims it might just be the holy grail for traders, something that blends the best of both centralized and decentralized exchanges.
So if you're a trader, you know this classic dilemma, right? On one hand, you've got centralized exchanges, or CXs. They're super fast, the fees are low, and it's a big but, you have to give up your keys and hand over all your personal info for KYC. Then on the other side, you've got decentralized exchanges, the DEXs. Here, you're in total control. Self-custody, no KYC. Awesome. The problem? They can be painfully slow and super expensive. So you always had to pick your poison, speed or freedom.
And that's been the million-dollar question hanging over DeFi for like ever, hasn't it? Why do we have to make that trade-off? Why can't we just get the performance of a CX, but with the freedom and self-custody of a DEX?
That question has been lingering for years, but now it looks like we might finally have an answer. So let's talk about Hyperliquid, a platform that was built from the ground up to kill that compromise.
So what exactly is it? Well, on the surface, Hyperliquid is a decentralized perpetuals exchange. But here's the real kicker. It runs on its very own custom-built high-performance Layer 1 blockchain. What that means is it's not bogged down sharing space with a bunch of other apps. This chain was made for one job and one job only, to let people trade and trade fast.
And that custom blockchain, that's the secret sauce that lets Hyperliquid make this huge promise. You're getting the raw speed you'd expect from a centralized exchange, but with all the security and freedom of a decentralized one. That means no more handing over your driver's license just to trade. And you, and only you, have full control, full self-custody of your funds, always. It's that simple. Trade fast, stay in control.
Okay, so that all sounds great in theory, right? But what about in practice? How hard is it to get started? You might actually be surprised. It's literally just 2 steps.
All right, step 1. You just connect your Web3 wallet. You know, your MetaMask, your Rabby, just make sure you're on the Arbitrum 1 network. Step 2, deposit some funds. Hyperliquid uses USDC for collateral, so you just zip some over from your wallet on Arbitrum into your trading account. The whole thing is incredibly quick and smooth.
And once you're funded and you're in, you're looking at an interface that just feels right. It's powerful, but it's also familiar. Honestly, if you've ever used a professional trading platform before, you're going to feel right at home here.
And this is where you can see that Hyperliquid means business. See, a lot of DEXs use something called an automated market maker, or an AMM. Hyperliquid? No way. It has a fully on-chain order book. This gives you way more precise control over your trades. You can place all the standard orders you'd expect: market, limit, stop orders, the whole shebang. You can even fine-tune your risk with either cross or isolated margin. This is a serious setup for serious traders.
And for those of you who like to turn up the heat a little bit, Hyperliquid offers leverage all the way up to 50 times your collateral.
But, and this is a really big but, you have to be careful. High leverage is a classic double-edged sword. Yes, it can multiply your gains, but it can also multiply your losses and put you on the fast track to getting liquidated. It is an incredibly powerful tool, so please use it wisely.
Now look, high leverage trading, it's not for everybody. And that's totally fine. So what if you want to be part of this whole ecosystem without having to actively manage trades all day? Well, turns out Hyperliquid has an answer for that too, a way to potentially earn some passive income.
So maybe you're thinking, hey, I want to get in on this, but I'm not trying to stare at charts all day. Well, there is another side to this platform that you should know about.
It's called the HLP, which stands for the Hyperliquidity Provider Vault. The easiest way to think about this is that you basically get to be the house. When you deposit your funds into the HLP Vault, you're providing the liquidity that other people are trading against. And for doing that, the vault collects a piece of all the trading fees, and, over time, it also profits from the net losses of traders on the platform.
It is super important, though, to look at both sides of the coin here. The upside is pretty clear. It's a way to generate passive income from all the trading happening on the platform. But there is a downside. The vault has risk. If traders go on a massive winning streak, the vaults and, yeah, your money in it can actually lose money. You're essentially betting that in the long run, the house usually wins.
Okay, so let's pull back for a second. What does all of this actually mean for DeFi? Why is a platform like Hyperliquid such a potentially big deal?
Really, it all boils down to this, and it's a huge deal. For one of the first times, we're seeing a platform that gives you a high-performance, professional-level trading experience without forcing you to make that fundamental compromise of giving up custody of your own assets. It's the solution to that problem we talked about right at the beginning.
Which brings me to one last question for you to chew on. With these new hybrid solutions popping up, platforms that are fast, cheap, and let you keep your own keys, is that whole CEX versus DEX debate finally over? Just something to think about. Thanks for diving into this with me. We'll see you on the next one.